Why is this market rally a bubble to you and not just people making money?
Well, I'm not drinking the Kool-Aid. I think if you look at it in historic perspective, this is another huge bubble driven by the Fed. Zero interest rates going on 6 years obviously is causing enormous amounts of speculation, carry trade, cheap debt that is fueling all kinds of asset markets. This is a financial asset bubble, and you can see it in the valuations if you want to look at it. The Russell 2000 is hitting another peak today. It's trading at 75 times reported trailing earnings. That makes no sense. It's up 43% in the last year. Earnings of the Russell 2000 companies have not increased at all. It's up 230% from the bottom. Main Street America is not doing that well, and that's what the Russell 2000 represents. Junk bonds, 1.3 trillion run rate this year for bonds and loans. We're back above 207, and we know how that ended up. A housing market is not recovering in a healthy way. There's huge amounts of speculation. 50% of sales are driven by cash. Normally it's 10%. This is institutional money coming in because the Fed has made interest rates so absurdly low.
So David, let's just take this one step further, because central banks around the world, for example, the BOJ, are for the most part following the Fed's playbook. So is the whole world in a bubble, not just America, according to you?
Good point. Excellent point. Exactly. The Fed is exporting this lunatic policy worldwide, and for either good reasons of defending their own currency and their trade and their exchange rate, or because they're replicating the Fed's erroneous policy. Central banks all over the world have been massively expanding their balance sheets. Take the top 8 banks. In 2007, the balance sheets were about $6 trillion, all of the banks together, the EU, the Fed, the Bank of Japan, and so forth. Today, it's $17 trillion, and they're expanding by $2.5 trillion a year. And as a result of that, there is bubbles everywhere in the world. Asset values are exaggerated everywhere because the cap rates are being driven close to rock bottom as a result of these massive central bank interventions. Now, I think we're in a race to the bottom, and it's only a question of time before the central banks lose control and a panic sets in when people realize that these values are massively overstated.
Well, let's talk about that matter of time. When would you predict that this could end badly? And does it have to end badly? I mean, could the bubble, for example, be just gradually let down? And could this end well?
Well, I haven't seen too many bubbles in history that have. Dot-com, people were saying, oh, it's a little exaggerated, but the air will come out of it. No, it was a thundering collapse. Housing at 205, 206 was clearly exaggerated after 11 years of constant rise, but it didn't collapse easily. It collapsed violently. The same was true with the Wall Street credit bubble of 2008. So I think the Fed has painted itself into a corner. They have no clue how to get out of it. They're making it up by the meeting and by the day. I have no hope that Yellen has any clue. She's an unreconstructed Keynesian who believes that, you just keep pouring liquidity into the market and maybe something good will happen. This is dangerous. We're in a very dangerous financial system that has been more or less wrecked by central banks and the policies.
But again, in terms of timing, are you looking at next 6 months, next 12 months, further out? What kind of timing are you predicting this could end with a bubble popping?
If I could see the black swan coming, or other people could see it, we would all be better off. You can't predict. No one knew that Lehman would be the trigger. It didn't cause the collapse. It was simply the final catalyst. And so, therefore, it's hard to predict, but we're in such uncharted waters. The markets are so extended. The central banks are so out of control that the minute I think we get some real taper, and I don't buy this idea that it's priced in. It's not priced in because when you have $75 billion of made-up cash flowing into the market a month, 6 or 7 billion every business day. That's driving supply and demand. That's pricing the bond, and that's pricing financial assets. And when the flow stops or diminishes, there will be panic in the markets.
But you know what? With all due respect and for the sake of the global economy, I hope you're wrong, David Stockman. But thank you very much for joining us today, former head of the OMB and the recent author of The Great Defamation. Thank you.